Hello and welcome. Today we are going to talk about investing in stocks. Investing in stocks can be a rewarding way to grow your wealth over time, but it's important to approach it with a solid understanding of the basics. Here's a beginner's guide to investing in stocks. Understanding stocks. Stocks represent ownership in a company. When you buy stocks, you become a shareholder and own a portion of that company. Stock prices fluctuate based on various factors, including the company's performance, industry trends, economic conditions, and market sentiment. Risk and reward. Stocks offer potential for higher returns compared to other investments, but they also come with higher risk. Different companies and industries carry varying levels of risk. Blue-chip companies, large, established, tend to be more stable, while smaller companies can be more volatile. Types of stocks. Common stocks. These give you ownership and voting rights in the company. Preferred stocks. These offer fixed dividends, but usually don't come with voting rights. Research and analysis. Conduct research before investing. Understand the company's financial health, management team, products, services, competitors, and growth potential. Use fundamental analysis, financial data, and technical analysis, price charts, to make informed decisions. Stock exchanges. Stocks are traded on stock exchanges like the New York Stock Exchange, NYSE, or NASDAQ. Companies are listed on these exchanges, and their stocks are bought and sold through brokers. Choosing stocks. Look for companies with a competitive advantage, strong financials, a track record of growth, and a promising future outlook. Consider diversifying your portfolio by investing in stocks from different sectors or industries. Investment strategies. Long-term investing. Buy and hold stocks with the expectation that they'll grow over time. This strategy requires patience and a focus on the company's fundamentals. Value investing. Look for undervalued stocks that have the potential to rise in value over time. Growth investing. Focus on companies with strong growth potential, even if their current valuations are higher. Buying stocks. You can buy stocks through brokerage accounts either online or with traditional brokerage firms. Decide how many shares you want to buy and place an order with your chosen broker. Diversification. Diversifying your portfolio by investing in different companies and industries can help spread risk. Risk management. Set a budget for investing in stocks and only invest what you can afford to lose. Stay informed about the companies you're invested in and be prepared for market fluctuations. Patience and long-term perspective. Investing in stocks is a long-term endeavor. Avoid making impulsive decisions based on short-term market fluctuations. Focus on the company's performance and growth potential over time. Seeking professional advice. If you're unsure or new to investing, consider consulting a financial advisor who can provide personalized guidance. Conclusion. Investing in stocks can be a fulfilling way to build wealth, but it requires research, patience, and a willingness to learn. By understanding the fundamentals and practicing disciplined investing, you can make informed decisions that align with your financial goals and risk tolerance. Thanks for watching, and don't forget to like, share, and subscribe.